we're back with you here on the Market Day Report. I'm Marlin Bohling, your tour guide to the ag commodities, and let's dive into our prices and see what they're doing up to the moment. We'll begin with corn. On our quotes provided by bar chart, we have December corn currently 2 higher at 543.5 per bushel. March is up 1 3/4 cents, so not a big move today. On the soybean side, by the way, the corn we did sell 426,000 and some change tons of corn to Mexico. Didn't seem to help too much though. Soybeans right now, November down 3 3/4. We're at 1242 3/4. That would put us about a nickel off of our earlier high from the early morning trade. Well, let's take a look at what's going on in the wheat. Let's go to Chicago wheat first. And we have December now 4 cents higher. We're at 759 1/4 at this point. On the Kansas City board, you have December now down 2. We're at 757.5. Keep in mind there's a lot of wheat going in the ground here the last 2 or 3 weeks. In the spring wheat market, kind of quiet. December only up 1/4 cent at 929 1/4 per bushel. Wanted to check out our cotton market this morning too. What can you say about cotton? It's at it again. We have December up 189 points at 106.42 per pound. $1.06. My goodness, that's some big prices. Let's bring in Chris Swift of Swift Trading in Nashville and talk about all this. Welcome back.
Good morning.
Little bit of strength in the corn this morning, but not very much. That sale to Mexico didn't seem to really matter much, did it?
No, not a lot. But you know, Marlon, we've got inflation. That's what I look around everywhere under the sun is we've got inflation, and we see the dollar moving higher. And with that, that tells us we have inflation because they're trying to combat it. So with that and what we saw last week with the grain stocks report not being down anything dramatically, we see the energy prices upsetting new contract highs. The wheat market within just a few cents of contract highs, we've still got inflation and are probably going to keep that inflation for some time to come.
You know, you mentioned this West Texas crude that we have on the screen right now, that November contract, up $1.85 this morning at 77.73. Now, do you think that'll be supportive to the ethanol and the biodiesel markets and maybe spill over into corn and beans?
I think it has to.
A little bit.
Every time we pay a higher price for something, then those prices want to be passed along down the line. And I think what we're seeing is energy is clearly the leader in most all of the commodities here. So with it leading the way, everything is going to cost more because you can't produce it without that energy.
Well, and speaking of which, here's the natural gas, and we're below $6 now, apparently at 595.3, and it's up 33 cents on the day. But I bet you're getting quite a few calls from people worried about fertilizer.
It is, absolutely. It's getting to be a trouble, and now that it's in the news so much of China having troubles with their energy problems, all it does is exaggerate the situation.
Let's take a look at what the Dow Jones Industrial Average is doing right now, and on the big board there. Well, we're down 56 points, Chris. We have December futures at 34,111. We'll be back in just a moment, and we'll take a look at our livestock trade, see what's going on there fairly early on a Monday when we come back. Let's get you updated on our livestock trade. We go to live cattle and the big board to see what the futures are doing. And right now, you have the December contract, $1.27, check that, $1.32 higher now at 126.52. Well, heck, that's on the high of the day as we're looking at it. February now up 92. It's at 130.95. Now let's check out our feeder cattle trade. And early on a Monday, we have it mixed. We have the nearbys a little firmer. November up 52 cents at 153.42. The deferred contracts are as much as 55 cents lower. They get a little weaker as you go further out. So it looks like some spread trading may be going on here. In the lean hogs, we're lower on the nearbys. October down 12. December down a nickel at 85.12, so no big shakes going on in the lean hog market. Let's go back to that feeder cattle market here, Chris. It looks like we have some bull spreading going on. Can you explain what's driving this market here right now?
I think we got a convergence and divergence of basis at the same time. For the front end of it, where we had been diverged for so wide, we've now come down in and we've actually swapped the basis into a positive in the first couple of contract months, and then out to the back again, where we're starting to get a better idea of what our packing capacity is going to be going forward. We have seen some reduction in the herd. We've seen some reduction in cattle numbers on feed. So what we'll probably see is just a little bit of changes there. Now that the basis has adjusted, there may not be a whole lot more of trading to take place until we find a really good bid for the cash market, or we see something come in a little bit more detrimental against the packing side.
Would it be normal for this kind of a cycle at this time of year in the cattle market?
We're usually a little bit softer this time of the year, and that might stay that way into the next couple of weeks. And a great deal of it's going to hinge on corn. You know, we're $2 higher a bushel on corn than we were this time last year. The feeder cattle market is really no cheaper, so we know that those costs and expenses are greater to the cattle feeder. And really, any kind of big movement one way or the other in the corn market should make a significant difference in that cattle feeder.
Well, talk to me about what's going on in this lean hog trade then. Let's take a look at the lean hog chart compared to what we had in that cattle chart. This is a big spike now in the last couple of weeks, but do you think it's overdoing it?
Not really. Again,
Really?
a convergence of basis. So the lean hog index was actually up today for the first time, still in the $94 area. So futures at 85, $10 wide. It's just as easily the futures could rally another $4 to $5 as it would be the cash market come down 4 to 5.
How does that compare seasonally to what the cattle market normally would do right
The
now?
hog market's usually pretty stout this time of the year. I think if I'm not bad mistaken, the more research shows the hog market a little bit firmer going into the fall of the year.
Mm-hmm. All right, so if you're a cattle producer, hog producer right now, with harvest getting close to the halfway point, would you be starting to maybe lock something in?
I'd be really concerned about my grain prices for this time next year. I would not be as concerned right now because we know we're going to have plenty of harvest and it's not going to impact the prices that much. But if we start to put a little carry on that back end and put those prices closer to $6 in the summer months, I think people are going to have some concern. So while they're still in that $5.50 range, that might be your consideration.
Okay, great information. Thank you, Chris, for joining us. Appreciate
Absolutely.
it. Welcome back again next time. Chris Swift of Swift Trading, based in Nashville. Janet, back to you.